So we're going to be diving into the definition of forbearance, loan forbearance, and what that kind of means in the process of it. We'll then talk briefly about the foreclosure and eviction moratorium that was put in place. And then lastly, we'll kind of just talk about the market as a whole and how COVID-19 has impacted it. So Kyle, obviously you are very involved with the lending aspect of this, and forbearance is something I'm sure you're hearing a lot about. Could you give us like a general definition of what that is and kind of the process behind it?
Yeah, absolutely. So the federal government put in place forbearance to try to assist homeowners and kind of minimize the damage that's happening right now economically. A lot of people are in a financial position that's challenging, and trying to assist with that. But it's important to understand what it is and whether or not it's going to be beneficial for your situation. So essentially, forbearance is a period of time in which you're not obligated to make your mortgage payment if you get that set up. Forbearance is something that can sometimes be in place for other types of loans as well. But in this circumstance, what you're talking about is a 3, 6, or 12-month period typically where you're not required to make your mortgage payment. So that's obviously something that sounds attractive, even to people that maybe are not in a situation where they absolutely need to do that. But there are some aspects of forbearance that are important to understand. And we're going to give a general overview, but if you wanted to get the details and specifics for your situation, you'd want to make a phone call and have a conversation with your loan servicer, because not every situation is different. But the important thing to be aware of with forbearance is just having an understanding of how that may be treated. So in some situations, what will happen is you're able to skip, let's say, 3 months worth of mortgage payments, but on month 4, you're now obligated to pay 4 mortgage payments at that time.
Oh man.
So that's something that it doesn't happen in every situation, but it is a possibility depending on how the lender handles that. And it's something that you want to be educated on and aware of before you make a decision to enter into something like this, because it could actually lead to more of a financial hardship or difficulty for someone if all of a sudden you have a really large sum that's due. Another potential situation that could happen is the missed payments that you had. Again, let's say you skip 3 mortgage payments. Those need to be made up over the following year. So they increase your mortgage payment in order to account for that payment period that was not made. So there are a few different ways that it can take place, but it's important to understand what that's going to look like, because it's possible that it will put you in a more challenging situation than if you were able to continue making your mortgage payments moving forward.
Right. Yeah. I mean, that's a big one, tough pill to swallow for a lot of people, I'm sure. I mean, you think you're getting relief and, it sounds great on paper, but, if you really don't do the research that you need to and talk to the right people, I mean, if you get hit with a 4-month bill of your mortgage payment, I mean, that's going to put a lot of people in a tough situation.